Hey yo, what is up? My name is Ishan. You're probably busy, which is perfect because on this channel we like to keep it sweet and short. No fluff, just quick and to the point. So in the next few minutes we're going to be talking about some of the major things that you need to know before NIO reports its earnings on Tuesday, August 11th. So as usual, I like to keep my videos super short and quick and to the point and super informative. So if you haven't already, please subscribe. We're almost at 1,000 subscribers and you can't even imagine how much one simple quick subscribe means to me. So without further ado, let's clock in. So currently Zacks is estimating a loss of 34 cents a share, narrower than the loss of 45 cents of last quarter a year ago, and revenues of 485.9 million or a 121.2% increase year over year for NIO. So overall the numbers are looking pretty impressive for NIO, and most likely it has to do with the resurgence in demand in China, especially for NIO's ES6 model. In fact, June delivery numbers for NIO were up 179% to 3,740 vehicles, setting a new monthly record, and July deliveries jumped 322% year over year to 3,533 vehicles. So not only are deliveries increasing, but it also seems like demand is also really picking up for NIO's cars, so revenue is not really going to be a concern here. So now that you have a rough understanding of what NIO's numbers are going to look like, the first and most major thing that I'm expecting and looking for, which you should be too, is NIO's cash on hand. Since inception, by the way, Inception, best movie of all time. Anyways, since inception, NIO has burned through $6 billion in cash and has about $1.92 billion in debt. They aren't profitable, and frankly they were about to go bankrupt during the pandemic. Fortunately for them and shareholders, they got a cool $1 billion from the Hefei government in a deal for 24.1% of their company. I personally didn't really like the deal, but you know what, that's a video for the future. Tencent also threw some money their way and they got a $1.4 billion credit line. Now what's key to see is their current state of liquidity. They've raised quite a bit of money, but debt as well. And it's not like that capital is going to be lasting them forever. And so it will be very important to see what they say on their current state of liquidity. In fact, last quarter they actually issued a warning saying, hey look, we don't have enough money frankly, and they ended up raising a ton of money. So as a result of that though, I personally believe that their capital raise should allow them to run smoothly the next few quarters. And if their margins on their cars can get better than the negative 7.4% of the last quarter, which their CEO said that they're trying to get to the negative 5% mark, and it may be even closer to the green. And if they can do that, then cash burn shouldn't be a huge problem going forward. And this also brings me to my second point, which is also their margin on their cars. NIO has already paid Jack Motors, who manufactured their cars, $87 million to cover up the losses of its cars. And the reason for this is their huge spending and expansion of NIO Power and NIO Spaces. And I know a lot of people hate on NIO spending so much money on NIO Power and NIO Spaces, but I actually see these two things as vital for the company's future growth. In fact, I was one of the people that hated on it, but the more I dwelled on it, I realized that these two things are what differentiates NIO from its competitors. Just like Tesla started the trend of selling cars only online, NIO is trying to differentiate themselves and add a sort of exclusivity for their buyers. In fact, we can see the success of NIO Power with over 500,000 battery swaps completed since its launch in 2018. And what's even key to remember is that their whole battery swapping is what allows them to continue to get the incentives that the Chinese government offers for electric car manufacturers. Tesla is already losing out on that, and NIO is keeping that because of their battery swap technology. Obviously, the segment takes up a big chunk of money to expand and maintain, but I believe this is what is key to NIO's success down the road and will really help its future growth. Nevertheless, it's going to be really important to see NIO's margins when they release earnings. So guys, that's it for the videos. If you enjoyed this short and sweet video, please subscribe. We're so close to 1,000 subscribers and it's really helpful when you guys subscribe. So please subscribe, like, and let me know down below what you guys think and if you're holding NIO stock. And I'll see you guys next time. Take it easy. Peace.
feeling